I want to welcome everybody to the Buyback Baton Rouge final investor call. This is me, Julian Gordon, and my brother Anthony Kimball here to lead this presentation tonight. And we are going to guide you through what we're doing in Baton Rouge to buy back Baton Rouge, specifically the Eddie Robinson Senior Historic District in Mid-City, Baton Rouge. This is going to be a confidential investment summary. Just a quick disclaimer is that the information contained in this presentation is considered confidential, intended solely for the use of the individuals to whom it's delivered. The circulation of this document or disclosure of its contents of any other party expressly prohibited. We do have the crowd fund, but we also want to be aware of who's investing with us, right? So this is not just an open door and anybody can come in. The people who invest with us have to have the right mindset, have to have the right understanding of money and how it works. And we want them to understand the deal that they're getting into. That's the problem with some of the crowd funds out there, is that they're just willing to take anybody who has money, and we want the people with the right level of wealth consciousness and the right level of cultural consciousness in order to invest with us and be part of this particular movement. So with that, we want to jump right in, and I'll give Anthony a second to introduce himself, and we'll do that as a part of our team. It is not just Anthony and I out there just winging it, okay? We have an amazing team behind us that Anthony and Tevin have put together. Anthony, tell them a little bit about AU, tell them about a little bit about Kimball Properties and Core.
Okay, how y'all doing? Anthony Kimball, managing partner of Kimball Properties. In this picture is our team. So I'm a partner, a commercial construction company, CMG LLC, which is a core management group with me and Tevin. So that group handles a lot of the construction management. I also have a project management firm that partners with some of the bigger projects. AU Management stands for Ahead of Our Time, AOOT Management, where on some of the bigger projects, we come in and help with some of the project management. We're about to bring another awesome brother in who's going to run our project management, our architecture on some of our bigger projects, and also be a service provider to outside clients. So, as we, build these funds, build our portfolio, we also are looking to vertically integrate and build service providers that will service, our developments in our development firm.
Yep. And so the three leads of this particular fund are myself, Anthony, and Tevin. Tevin's not here, but Anthony will explain a little bit about his background in real estate. We got in the game at the same exact time, and then he'll share a little bit how he met Tevin and Tevin's role in this entire vision. And then I'll conclude with sharing what my role is in the Buyback Baton Rouge Fund.
Yep. So, I'm mainly on the development, the negotiating side of the deal. I tell people where my happiness comes from is the deal, the project, putting together the project, putting together the timeline for the project. So that's the role I really play within this. Tevin, and like I said, again, the core group, they handle all the construction management, that piece of it. And Julian has really did a fantastic job as far as the fundraising, our marketing, so building out that. Some of the things that I don't really like to do and I'm not good at. So, this picture.
That I love to do, and I love to do it.
Yeah.
So it's a beautiful thing to be, home. This is home for Anthony and Tevin, and I'm not an outsider, but because we formed the brotherhood, but I really want to tell their story, and I saw something powerful here when Anthony and I met about 9 months ago here in New Orleans. We actually both went to Stanford together, an overlap for 2 years, and didn't meet each other at that time. He was a star running back, and I was in business school at that time, and it took life to bring us together here in New Orleans, and then to find out what he was up to in Baton Rouge. And I knew that I could bring my skill set and everything that I was doing in real estate, not only with my own personal portfolio, but with everything I was doing with the multifamily movement, to energize everything that was happening there. And this has always been a vision of mine. And not only did he have the story, not only did he have the right heart and the right internal compass guiding him, but he had the right team. So I'm excited to be part of this and uplifting these two amazing young men to help them manifest this and bring my community, who is committed to wealth generation and particularly through real estate, into the fold. Now, it's not just us. We are backed by a lot of key partners. We have legal partners from GameVest, Urban Vantage, Roth Law Firm. Our lenders are going to be Fannie, Freddie. We have strong relationships with People's Bank and Bancorp South, which are two major banks here in Louisiana. And then we have our property management and construction through Core Management and Smith and Brown Management and Consulting. So the team is solid, and it's not just two guys sitting behind a computer making this happen. We have the right infrastructure to really build something amazing here in Baton Rouge. So real quick, we're going to go into why real estate. Some of you type no if you have not invested in real estate to date, and type multifamily if you have a type single family if you have a single family, type multifamily if you have a multifamily, and type fund if you've invested in a fund. Okay. So no, single family, fund, single family and multi, not yet. Fund, multifamily, single, okay. A lot of single families, a lot of no's, and then some multifamilies and some funds here, okay. So it's good to get a feel for who's in the room. And so a lot of you already know the argument in terms of why real estate. What I'm gonna allow Anthony to do is share a little bit about his background doing larger developments like this. This is not a path that we haven't walked thus far. In fact, one of the properties that is in the portfolio right now is in just phase 2, and Anthony was critical in phase 1. And so I'm gonna let him talk about his work in real estate development and what he's been able to do thus far.
Yeah, so I started buying property in 2012. I want to say when I was like 25. And for me, it was just one, my parents were buying single family and duplexes in the inner city of Baton Rouge. And for me, I didn't have a great knowledge of, of public markets. And for me, I always tell people, I want a person I really look to understand anything that I'm going to put money in. So for me, growing up around real estate, I worked in private equity in college while I was at Stanford in some internships. So for me, it was something that I understood, and a vehicle I knew, I had relationships to. And, so and I always tell people, like, you got to figure out what your resources for. And for me, with what my resources were, real estate and, investing in tangible assets, made more sense for me. So that was one of the big things in real estate. And, real estate is just one vertical, that's, a great asset for now. And over time, some of those things change as far as where your opportunities are to make money. But for me, it was just understanding it from my upbringing, from my mentors. So the project we're looking at on screen is a bakery we purchased in New Orleans now about 2.5 years ago, that we turned into 6 units. We're actually doing a phase 2 to this development now, adding a duplex. And we also bought an old laundromat that was across the street that we also turned into 6 units. So this is in the Bywater in New Orleans, a project that we're actually about to refi into some kind of the same burr strategy that you're going to see us explain with some of these other developments. But for me, it was just something I understood. It was a tangible asset. I didn't have a great understanding of public markets. And that was, really my why. And I had the resources. When I looked at, my social circle, my parents, I was able to connect the dots. I always tell people, like, one key to success is, being able to connect those dots.
100%. And so Anthony graduated, not from Stanford, but in real estate, and stepped into a larger development over the past, what was this, 3 years ago, Electric Depot started?
I mean, we worked on, you could probably say we started working on Electric Depot 5 years ago. And it was a public-private development with the city of Baton Rouge. Phase 2 is actually potentially part of this fund. It was about $55,000 in commercial and 16 residential units in the first phase, and the second phase would be 100 units. So this was a historic tax credit deal, enterprise zone deal, public-private deal. So definitely one of the most difficult deals you could be a part of. And, for us, with a lot of our real estate with Kimball Properties, it was us proving kind of a thesis, trying to really figure it out. Then we went out and started raising money after we had did some of these projects with our own money. And, that's important for me. So people a lot of time actually, and I'm about to start doing some more teaching and consulting things. But for me, before, I really raised money, it was key for me to have some success in some of these, in real estate before, I was, looking to bring other people's money in.
Indeed, indeed. And you all, many of you know me personally, and you know that I've been building my personal portfolio right now. I actually have 12 properties with 33 apartments here in New Orleans, Baton Rouge, Oakland, and Brooklyn. And so this is my first time stepping into larger projects like this. And so it's just great to have somebody who's already walked the walk and done projects of this size and to be able to partner in this way. But for those of you who have not invested in real estate to this degree, you know I teach wealth consciousness, and oftentimes we think about how or do we build generational wealth, and the building generational wealth means that we're actually employing our money. Okay, a lot of people get employed to make money, but the reality is, if you want generational wealth, you have to learn how to employ money. And we've been taught this lie that cash is king, and the reality is that cash is not king. Cash is actually the lowest yielding asset in the entire world. I'm going to repeat that. This green piece of paper is the lowest yielding asset in the entire world, but many of us have been taught to paper chase, right? While the wealthy actually get real tangible assets like real estate under their belt. So when you really look at the chessboard, Nipsey, what did Nipsey say? We playing chess, not checkers, right? When you really look at the chessboard, the queen is the asset, and queens give birth to kings, which is cash flow, and then kings lead to pawns. And when you're playing chess, you will happily sacrifice a pawn to get another queen, another asset on the board, right? And so this is the game that we really want to play if we want to step up beyond just checkers and we want to get into chess. We have to understand what is the actually most valuable asset on the board. And we believe that it's real tangible assets like real estate as well as businesses too. And so for those of you who have money sitting in a savings account, literally Bank of America, your savings account, the APY is 0.03%. 0.03%. Okay. And that's that's basically your money being lazy. And we know that George Washington had slaves, right? And so everyone, and George Washington's on the $1 bill. So given that he's on the $1 bill, I'm gonna work that George Washington. Every George Washington I have, I'm gonna be enslaved my ancestors, and I'm actually going to work every George Washington that is in my pocket, right? I'm not going to let it sit around at 0.03%. That's basically letting money just sit around and watch TV. And so we have to make our money more productive. We have to employ it, and we want to employ it at the highest level possible. Now, for those of you who have money in the stock market, how many took hits in the stock market in the past 4 months? How many took hits in the stock market in the past 4 months? Let me know. I'm seeing some negative emojis. Right now, with the stock market, you don't really have control, right? See, a lot of people look to Warren Buffett to get advice about the stock market, but you realize that Warren Buffett can call up Tim Cook of Apple. If Tim Cook of Apple does something that Warren Buffett doesn't like, Warren Buffett can call him like out of his sleep at 3 a.m. Right? Warren Buffett is also buying stock and shares of Apple at discounted prices in bulk. Okay, so we're taking this advice from people who are playing a different type of game. And so in many cases, stocks, you have no control. There's a lot of volatility in that space, and you're just hoping. If I ask many of you to call up whoever's managing your money right now, most of you don't even have a phone number. You don't know who's managing your money. You don't actually know what stocks you're even invested in, right? So this is why we want to give you a more solid form of asset to consider. Now, when you look at the S&P 500 over the past 20 years, I've actually run the numbers, okay? A lot of people think that the stock market grows by 10% every single year. It's not true. The S&P 500, which has been it's a major index in the stock market, it is actually growth rate. Its growth rate over the past 20 years has only been 4.23% every single year. 4.23%. So for every $100 that you have in the S&P 500, you would have made $4.23. Okay, over the course of a year, and that's decent. That's way better. Go ahead.
Man, not to jump, not to, and that's not to say you can't make money in the stock market, because,
Right.
Julian's been along on my path of not, but I've been studying public markets a lot more. I've been, I have mentors, where, I've had a great year in the stock market, you know what I mean?
Yeah.
But it's also is one of those things I tell anybody, know who's managing your money and educate yourself on markets and understanding what's going on in these markets. And then the notion that, hey, I can put money in the stock market and that if everything is just going to go up. That's not true. You're seeing times changes. That you look at companies like Exxon, where Exxon was dropped from the S&P 500. You know, and this is a company now that used to be a staple of like our country, you know, one of the largest, you know, companies in our country, but times
Yeah.
are changing.
Yeah.
So it's true to, you know, what, even with real estate, and what we're doing. And that's why I'm excited that people are joining in on these calls and just not saying, hey, I know Anthony, I'm just going to give him my money. No,
Right.
educate yourself on what's going on, because on anything, like, it's investment, it's a risk. So, and understanding that, and, you know, if you're going to even put your money into real estate passively, you know, with guys like me and Julian, you should be also trying to further understand real estate. And that's one reason we have this Facebook group to, you know, bring you guys along on a journey,
Yeah.
because it's important for us to educate you guys. For one, that helps us with questions you might have. It also, you know, potentially opens us to partnerships with you guys in other states, because this is, you know, we understand we can't be in Baton Rouge just doing development, you know, forever. We're going to need to diversify. I saw someone put that in the chat.
Yep.
You know, understand markets, understand what you're getting yourself in, you know, and you know, truly study how you're going to make money.
Yeah. Period. Period. 100%. So diversify, diversify, diversify. For me, my portfolio is probably, I would say, primarily real estate, and then of course my own business, and then of course I've started investing in other businesses at a high level. So you want to diversify, but from an average standpoint, the S&P 500 is returned at 4.23%, and we want to share with you an asset class that we believe is even more consistent than that as well. Okay, so when you look at our target is actually a 15% IRR, okay, or rate of return, okay, internal rate of return. And so what that looks like versus a savings account versus S&P 500, if you're just like dumping money in a 401k and not looking at it and don't know who's managing it, right? Basically on $1,000 in your savings account, that's 30 cents at the end of a year, okay? In the S&P 500 at 4.23%, that's $42 after a year. That's about $3 a month, okay? $3.5 a month. And then with the asset class that we're sharing with you in terms of real estate, our target rate of return is actually 15%. So that's actually $150 on $1,000, okay? So this is how the numbers play out from a cash basis standpoint, all right? So I shared with you that Queens are the asset. For us, the example of that asset is actually real estate. Okay, this is the portfolio that we're going to be sharing with you tonight to add a queen to your chessboard. That's it, one queen to your chessboard. There are
And
many different.
with
Go ahead.
looking at this illustration, I think, you know, what's important, for, you know, we're looking at this is that, hey, it shouldn't always be, you know, you working your butt off for earned income. Put that money to work for you. Develop a plan where, hey, I'm going to invest, you know, this much of my, you know, of my earned income into different things, that this money is working for me. For me, I'm trying to get to the point where I'm investing 70 to 80% of the money I make. That's my goal, and to be able to live off, you know, 20 to 30%. You know, so for me, it comes to being able to figure out revenue generators that,
Mhm.
you know, I'm able to invest and invest my money, you know, and have money work, you know, have my money literally working for me as I sleep. Because at the end of the day, this is not passive for me. This is my day job. You know, earning you guys money and developing real estate. But from that, you know, whether it's public markets, whether I do peer lending, I mean, I've even started investing into sports cards lately, trading cards,
Mhm.
because it's an alternative asset that's really doing really well this year. But understand that, like, we, you're earning this money, and then you're putting this money to work for you, so that less of your earning, you know, that earned income, your revenue needs to come from that earned income. A bigger percentage can come from, you know, passive, and that's what for us freedom really means. I always tell people,
Okay.
for me, I'm looking to achieve freedom and trying to help the people around me achieve freedom, and that freedom comes to where financial issues and all that's off the table. So I really can figure out what my, you know, what I enjoy doing, what my happiness is. And if my money's working for me, where I can now spend my bandwidth on what is my happiness, that's what freedom represents to me.
100%, 100%. And people have to know that, being debt free does not mean financially free. And that's a huge awakening for folks because even if you're debt free, if all your income is still active income, you're still trading time for money, right? So at some point, in order to get on the wealth side of the equation, your true freedom is when your passive income is greater than your cost of living. It's when your passive income is greater than your cost of living. And so we just want to provide with you one way of many to add a stream of passive income to your actual portfolio as you make your way towards true freedom and full freedom. All right. So with that, we want to explain our business model. We want to explain our business model and how we do real estate. Okay. This is not fixing and flipping, this is not wholesaling. This is not tax liens. Okay, there's a lot of different things you're probably hearing on the internet about how to get into real estate. We're going to share exactly with you our business model, which and for most of our property hinged on historic tax credits, which Anthony's going to break down in a second. You may have heard of the BRRRR strategy, and you may have heard of that, and primarily on a single family home of how you do that. We're going to show you how we do that on larger developments to develop a property, get as much of our money back out of the property as possible while it's still cash flowing afterwards. So I'm going to let Anthony guide you through the BRRRR strategy and how we use that on larger developments.
Yep. So this is the BRRRR strategy. Most people who've looked in real estate did some, invest, you may have heard this strategy, and what we're doing is, buying a property, renovating it, renting it, refining it, and then, really rolling that money over into the next project. A lot of our projects we're buying either mostly cash, all cash. Then we're going to the community bank to get a construction loan. Then we have an in-house property manager where, we're marketing and our properties, renting them out. And then we're going back to the bank and pulling that equity out of those properties. And for us, it's, and why I guess this also leads to like why Baton Rouge, and I mean, I tell people, for me, if you can buy a property, under market value, you can execute. I mean, when I'm talking about construction, execute at, market or below market value, and then you can get this property rented in a timely, timely manner. You can make money in real estate. If you have lending partners who are able to, refi, you good banking, good credit, you can make money. And that's why Baton Rouge made sense to me. I'm from here. I have relationships here. I grew up here, mentors here, parents are in the real estate here. So those are the reasons why Baton Rouge made sense. New Orleans made sense because of those relationships where, hey, I can buy properties under market value. People, I was like, we introduced a real estate agent. I don't work with real estate agents. I barely ever talk to real estate agents because at the end of the day, I use my personal relationships to be able to find property. Julian will tell you, most of our properties are found by me getting on, property view or figuring out who owns it. And then I'm getting on Facebook, or I'm calling my daddy, I'm calling my mom or somebody and figuring out who owns this property. And then I'm having a direct conversation with that person to, be able to purchase this property. And that's when you get the best deal. I've worked with divorce lawyers over the years, estate lawyers. I tell people, sometimes, especially as a Black community, we, kind of deaf and, some of those things, kind of, we have like taboo about it, but it's going to happen. We're all going to die. So at the end of the day, one of the best deals, I bought properties. I bought 15 properties. Some of these properties valued at 30, 40, 50,000. This lady, husband died. She had 90 properties. She didn't care what they were worth or where they were at. They were all going for 10,000 a pop. That was her number. So she, and that was one of the best deals I've ever did in my life. You know what I mean? And at the end of the day, those personal, it comes back to, I always tell people what your resources are. So at the end of the day, one advantage we have in Baton Rouge because of me and Tevin's personal relationship is being able to get these projects under market value and then execute. We have in-house construction. So instead of, typically being charged, 20% commission, what you see market, that number for us fluctuates between 10 and 15%, depending on what's in the budget. And because we are partners in the construction company, we can make those type of decisions based on the project. We have, great lending relationship. One of the banks we work with, I literally know two people on the bank board as far as voting on the loan. So, and two of the people, one's my best friend's dad, and one's one of my high school teammates, his dad. They both sit on the bank board. So I know with this community bank, the deal makes sense. We're going to get the loan. So typically, this is how, the steps, we take as far as acquisition, construction. As Julian talked about earlier, we do most of our projects are historic tax credit projects. So that means we're getting historic tax credits because of they're in a certain district in Baton Rouge that is eligible for federal and state historic tax credits. We're able to get tax credits for these projects and and able to monetize them and actually bring real equity into our deals through these tax credits. So all of these things, I look at it from personal relationships, relationships with bank, historic tax credits. These are just things to mitigate your risk on a project and make this project more financially feasible.
Break
So
down
this is
HTCs for them.
step.
Break down HTCs for them.
So historic tax credits was a program put in by the federal government to make old blighted properties in cultural districts or in historic districts more financially feasible. A lot of times when you look at older buildings like the old bakery we bought in New Orleans, we're doing Lincoln Hotel, an old building. Typically, when these projects are old, they have asbestos issues, they have lead issues. So typically, most developers, when they look at these projects and look at, hey, this is going to cost me more than if I just go buy some land and do some new construction, and that would be the preference. These historic tax credits now make this deal more feasible. So on a federal level, for rough numbers, we get 20% of construction costs, and on the state level, we get 20% of construction costs. So let's say, we have $1 million construction budget. We're going to get 200,000 federal credits, 200,000 in state credits. Those credits are a dollar for dollar a deduction in your tax liability. So if I had, $1 million in tax liability, I can take these credits, 200,000 credits, and lower my tax. So how it works, we then take these tax credits and banks, other large entities, high net worth individuals, real estate developers. The big thing you're going to see this year is construction companies, because construction is going crazy. They have these huge tax liabilities. So I can take these 200 or 400,000 in credits, 200 federal, 200 state, and sell it to a construction company, who has this tax liability for 80 cents on a dollar. And now they've lessened their, tax liability.
Yep, got you. So I'm gonna break it down in a little bit different way because I learned what the historic tax credits are. So basically, y'all, again, $1 million construction budget, we get 20% from federal, 20% from state. That's about $400,000 in tax credits. Okay, those are not dollars yet, but we go find people who need those tax credits and then we sell them to them. So it's like selling a coupon to somebody, okay, at 80 cents on the dollar. It's a little bit like ticket scalping, but ticket scalping is illegal, okay? This is perfectly in alignment with how these get monetized. So now let's say 80% of $400,000 is what, $360,000. That is actually now turned to cash, and that is actually a return of capital to the fund. And so that's what makes historic tax credits so powerful. Now, due to the historic tax credits, we are required to maintain some design features that are historic on the buildings that we do. And these are called QREs, qualified restoration expenses, okay? So certain types of historic windows, we have to stay in alignment with that. Doors, floors, walls, exteriors, etc. So we have to stay in alignment with those design principles. But as long as we do that and follow those guidelines, we are able to get these we're able to get these historic tax credits, and that becomes real capital that we get to return back to the fund, which then gets returned to investors. So the final two steps, once we monetize this tax credits and we get those right after we're done with construction, is actually stabilizing the property. And stabilization means that we have to have the property rented at 90% capacity for at least 90 days. At that point, the bank will, People's Bank or Bancorp South will lend to us, right? Or Fannie or Freddie will, actually Fannie or Freddie will actually give us a long-term loan, okay? Now that the property is stabilized and back in full use, and we get to refi out of the short-term financing that we got with the construction loan, okay? So this is the process that we use especially on our larger developments, and this is repeatable over and over. Again, these are federal tax credits. These are state tax credits. Anywhere we can find properties that are in historic, eligible for historic tax credits, this model is replicable. So we're going to give you an example of one property that we are working on in a different fund, because these are the numbers that we are actually going through right now on the Julia Street.
So this was part of, so before me and Julian partnered, I started raising money as just with my company, Kimball Properties. So this was a project that was part of the KP fund of that was just my existing friends and family that I initially started my fundraising earlier this year. So this is an actual building, Julia Street, 1419 Julia. The property is about $300,000 to acquire. We bought it all cash. It's going to be soft cost construction numbers going to be right at $1 million, 977. So basically, the fund, injected $300K to buy this building. We then went to a community bank, got a construction loan. Okay, so then we'll have our tax credits. Once we don't monetize the tax credits, that will return $250K of the fund's money back to the fund. We'll then, rent these units out, then once we're at 90% for 90 days, we'll go to Fannie and Freddie, and then we'll refi. That'll also return a small chunk of equity back into the deal. From there, we're just, the project could be rented out, for the next 5, 7 years, how long we decide to hold on. So how money is returned back to the fund and then in return to investors is tax credits, refi, and then rents from operation, running from renting the project out. Those are the ways. And then eventually, if we sell the project down the line, or potentially refi again, depending on where rates are 5 to 7 years from now. But those are the different ways we bring that money back in.
Got it. So you all heard that. 4 ways to get paid in this particular fund, okay? It is 1, based on the historic tax credits, okay? That money coming back to the fund and it being either multiplying it and reinvesting in another property or return of capital to investors, okay? So historic tax credits, okay? Refi, operating income from rents minus operating expenses, okay? And then sell. So that's the 4 ways you get paid with this particular fund and this particular type of investment, all right? So a lot of people have been worried about coronavirus and its impact on real estate. Of course, it's impacted the entire global economy. And we want to just address that up front. We know that question is going to come up. And Anthony and I are still bullish on real estate. I've purchased 2 properties in the past 30 days. Why? First and foremost, what has happened to interest rates, everyone? What has happened to interest rates as a result of coronavirus? Interest rates have gone down, meaning that we are able to borrow money cheaply, okay? This is the cheapest money has ever been. Now, if I can borrow money at 3.5% and I know how to make it work at 15%, how much money should I borrow, y'all? If I can borrow money at 3.5% and I know how to make that money work at 15%, how much money should I borrow?
As much as you can.
I should borrow as much as I humanly can. Okay. The other thing that we're noticing in coronavirus is that people who bought real estate wrong or have made other poor investments are having to sell their real estate at discount at this particular time. Okay. So especially commercial properties, okay? Because the business models of major commercial businesses are obviously being changed. And so people who bought commercial property in the wrong way are having to come up off of those assets and sell them at lower than they would have been priced in February and January, okay? So we're getting properties at lower cost basis. We're getting extremely low interest rates. And because we are actually developing these properties are not in full use at this moment in time, that gives us a 6 to 18 month window for the economy to recover, for things to settle, for things to fall into place. And we actually get to design these commercial properties for those that are commercial. We get to design them in a way that are friendly for corona-based business models, okay? There are obviously business models that are not corona-friendly, okay? And then there are business models that are corona friendly, that take into account this new paradigm that we're stepping in. And we actually get to design them and look for businesses that are going to rent from us that are COVID proof. Okay. So this is how we see the impact of coronavirus. 1, we're getting properties at discount, and 2, we're getting money at a discount. Okay. Like long-term 30-year mortgages at a discount. And so this is how we are approaching it. On top of that, while we're buying these properties at a discount, where are people moving, y'all? If you look at the one-way U-Hauls out of New York, it's absolutely ridiculous because people realize that they cannot survive and it was unsustainable to live in these expensive markets. And so we have a deep belief that the Deep South is going to win long-term. We have a deep belief that the Deep South is going to win. As more and more people are working from Zoom, working from home, if I can work from home and I don't have to live in this expensive place, why don't I go live somewhere where it's actually more cost effective and my money goes longer? And we believe that the South is going to be a key element of that. We are going to be returning back to where our ancestors were from, or not where our ancestors are from. Obviously, our ancestors are from the continent. Some are actually from here. If you know about anything about the Black and Mardi Gras Indians and things of that nature, Anthony has an indigenous roots here. So we are going to be returning back to the South, which is actually more home than even the North. So this is how we perceive the impact of coronavirus on our investments. Anthony and I are still bullish in terms of real estate, especially in the South and especially in Baton Rouge, in our personal portfolios, as well as these larger portfolios of Buyback Baton Rouge Fund. Okay. All right. So with that, we want to walk you through some of the projects that we are invested in. Most of them we've already acquired. Some of them we have contracts on at this moment in time, and we're just waiting for the fund to close to be able to actually go fully acquire those properties. And Anthony said, the reason we're focused on this particular neighborhood, the Eddie Robinson Senior neighborhood, is because one, it's a historic and it's marked a historic district. So pretty much every building in there qualifies for historic tax credits. The low cost basis, and we'll explain the history of that neighborhood, this neighborhood in just a second. And then of course, Anthony mentioned his relationship. So it's not just about having financial capital, it's also about having social capital, okay? And so this is why we believe in this particular place. So let me show you on a map where the Eddie Robinson Senior neighborhood is actually located. It is located between Work, which is in downtown Baton Rouge, and White Wealth, which is in the Garden District. Literally, when you cross over from this side here over Park Boulevard, you will see a drastic change in the style of home, right? You will see a drastic change in the price of homes for the same exact square footage. And so Anthony and I have seen this pattern over and over and over again. We saw it in East Palo Alto when we were at Stanford. I saw it in West Oakland. I remember I was playing T-ball in West Oakland, right? And there were drug addicts in the outfield, right? While we were practicing T-ball. Now you go to West Oakland. West Oakland is completely different. Why? Because West Oakland was positioned between downtown San Francisco and downtown Oakland. It was like inevitable. It's like, dang, I wish I could have saw this 20 years ago, right? And I wish I had the capital at that time. I saw the same thing in Brooklyn, right? What did Jay-Z say? I could have bought something in Dumbo for like $2 million, and now it's worth like 20 million, right? So we see these patterns happening over and over and over again. And so when we talk about location, we're not just talking about McDonald's on the corner of some major intersection. We're talking about an entire neighborhood that is positioned for growth in the near future, all right? And as we zoom in on the Eddie Robinson neighborhood, these are where the properties that we control and that are in this portfolio, some that are in this portfolio and others that are in other funds that Anthony has created prior to this, they're strategically located on all four corners of the Eddie Robinson Senior Historic District. Together, that entire neighborhood is about 200 acres when you measure it, and all of our properties are literally in walking distance of each other. All right, so this is different than at Tulsa, Oklahoma, right? You've heard Tulsa, Oklahoma, the Greenwood neighborhood, and how it got burned down. Sometimes people think, oh, what happens is this neighborhood is not an all-black neighborhood. We already have friends who are in this neighborhood, okay? So this will not be the same as Tulsa. This will not be the same as Greenwood. We're going to be drivers of the vision for this neighborhood, but this vision is actually inclusive, and we already have met counterparts who are in the neighborhood who we hope to cultivate this beautiful space with and this beautiful community with. So we just want to be clear that this is not an all-black neighborhood. It is historically black, right? But there are other people who've already seen what we see and have already moved into this space, and we are going to co-create with them. But of course, we're putting thought energy not just into our properties that are in this neighborhood, we're putting thought energy into the development of the entire neighborhood as a whole, okay? And so Anthony has done things like facade grant programs where people who are unable to ever paint the front of their homes will do a facade grant, part of a city program where they redo roofs for people who can't afford to redo their roofs. So we are committed to everybody who currently lives here, right? And making sure that they don't get excluded from this. Remember, there's a difference between gentrification and colonization. What we've been calling gentrification is actually colonization. Colonization is when a group of outsiders comes in and tries to displace the people who are living there, the originals, okay, right? The indigenous. A gentrifier is somebody who uplifts the community as it is. And that's what we are doing. We're doing gentrification in a good way. Anthony, anything else to say about this
I would
neighborhood?
say too is just understanding development, understanding location, like and I became really interested, just the story, understanding like why this neighborhood and my interest when I grew up, multiple of my friends played in the NBA. I played college football, had a brief stint in NFL. So when I came back home about 7, 8 years ago, because of me being a gatekeeper to a lot of these professional athletes and their money, I was getting put on all kind of boards, all kind of stuff. But I used that to really get in the know of like what was going on. And one thing I saw, in this neighborhood, you look at Government Street, they were, had this plan to redo the street, add bike lanes. You had Dufrock Elementary, you had McKinley Middle, you had Baton Rouge, all magnet schools, all been renovated. One thing, just as a learning lesson to anybody looking to develop their city is follow infrastructure improvements. Follow where the city's putting money into it. And that was one thing that was key, was like, and one reason that I'm really, going so hard behind this neighborhood, because I saw what the city was doing and I saw the vision and I saw that, hey, for Black people, if we didn't get involved in ownership of this neighborhood quick, that this neighborhood was going to be the story that you've seen in a lot of other neighborhoods around the country as far as gentrification. A lot of the people who had been there, wasn't going to be there in 5 to 10 years. So my thing with this neighborhood is, hey, it makes sense. It's right by downtown. You're getting the infrastructure improvements. You potentially have a train station at Electric Depot 5 to 10 years down the line. That's the site that's been selected. If there's ever a commuter train between Baton Rouge and New Orleans, that would be like the downtown location of the train. So when I started looking at him, this is where the city's putting money. This is where the city's, paying for all these plans and these, community development plans, $600,000, $700,000, $800,000. I was like, well, this is why, if this makes sense to them, if they're pushing, their influential people into this neighborhood, this must be a good development and an investment opportunity. So, that was kind of one of the things that really got me interested. I saw, how the city was marketing this Black area to be gentrified.
100%, 100%. So how the neighborhood, really quickly, how this neighborhood got divested in the first place. One, the first way was running the 10 and the 110, the interstate system, running freeways through this historically Black neighborhood and cutting off some of the wealth. Okay, this has been strategically done in cities all over the country where the interstate system was strategically run through Black wealth in order to disrupt that. The second thing was actually integration. A lot of people think integration is good. Well, what happened was the Lincoln Hotel and the Lincoln Theater, the Black Theater and the Black Hotel, once integration happened, we as Black folk wanted to be like other folk. And so we started going to their theaters and their hotels instead of actually doing business with our own. And as a result, those places are now out of use. Fortunately, the Lincoln Theater is in our portfolio. We are reclaiming that and we're going to put it back into use and into Black ownership.
Lincoln Hotel, not Lincoln
Hotel, excuse me, Lincoln Hotel, excuse me. And then finally, what happened, the third thing that happened is the Black middle class, trying to keep up with the Joneses, they, after white flight, followed Black flight. And so now you take the Black wealth that was in the community out of the community, and all of a sudden you end up with 200 acres of many blighted homes and squalor. And so this is what happens and what has happened in our communities over and over. What we really believe that this is the last wave of white flight, y'all. Like this opportunity to reclaim our communities, it will not happen again. Once these places like Oakland, Brooklyn, et cetera, are gentrified, there will be no going back. There will be no flight to the suburbs again, and this opportunity to present itself again. This is it. And so we want to take advantage of that here in Baton Rouge. So let us walk you through the portfolio of the properties. I know you want to touch the buildings. We were doing tours. We have one more tour actually on Monday, next Monday. This one was canceled today due to the coming storm Storm, Hurricane Sally. But we have a tour on Monday. If you are in the neighborhood and can get by, that's 2 o'clock on Monday. We also have a video that we put on the website, which gives you a virtual tour of the property so that you can get a feel for them. But we're going to walk you through those properties right now. And so the first property I want to walk you through, actually, I need to change this. This was a mistake. This is actually no longer 25%. We are actually in position to have 100% stake in Electric Depot Phase 2. Anthony talked about Phase 1 earlier that he was an integral part of. Anthony, you want to take them through Electric Depot Phase 2?
And I also understand, these are the core projects. I mean, to be honest, anytime that, one of these projects doesn't make sense, it will be, we will go in another direction. And that's the beauty of some of how a lot of these projects are structured. This is a public-private deal. I really felt we took the chance on that first stage, which is majority commercial, which, that has been, especially with COVID, something we've continued to figure out. And that's why we wanted to separate the 100 unit, what we felt the more safer investment, the 100 units, as something we would raise money for. So Electric Depot, public-private deal. This was a true catalyst project for this area. This project needed to happen, so a lot of things around this project can happen. So this future phase that's in orange will be, kind of where the 100 units and the parking will be. And whether this parking lot is on the left, that's potentially where the city will do a train station down the line if we could ever figure out this commuter train from Baton Rouge to New Orleans. So that was the catalyst project, the 100 units there. This project is probably, I would say, 6 to 8 months away from being able to start construction. This one probably take the longest time. Like, it'll be a HUD D4, which is, a little bit more complicated deal. Just, it's basically a loan where HUD gives you the loan to actually do the construction. So that's Electric Depot. We're still, going through the due diligence, making sure this one makes sense. We're not obligated to buy this land or anything like that. Public-private deal, land lease. You go to the next one.
Yep. So here it is. Here's the Lincoln Hotel. And originally, a few months ago, we only had a 25% stake. But Anthony, being who he is and the relationship that he had, we were able to get a 100% stake in the Lincoln Hotel. That's actually going to be converted into 12 units. It used to be 46-bedroom hotel, and it's going to be converted into 12 multifamily units with 2 retail bays at the bottom. And we will be leasing parking from the business that is behind. And so just a quick view of some of the drawings. This is what it's going to look like. We just met with the architect, 2 weeks ago. Last week. He came up from New Orleans. And we're almost done with those plans. We were just finishing some final things and making some final decisions. And we're literally going to start this within about what is this?
This project will start construction before the end of the year. That's when right now we're trying to finalize who the tax credit investor is going to be, finalize the lending on it. But probably about 3 weeks, 3 to 4, probably 4 weeks out for finish the drawing. Then probably about another, I would say 6 to 8 weeks of permitting. But I'm thinking end of November, December, we should be getting this project starting off. Like we'll be starting some of the demo. And projects like this, old historic building, so we're working with the state in their brownfield fund to potentially get money to clean some of the asbestos and the lead out of the building. But this is another catalyst project. This project we will do. This needs to happen. Great history, Aretha Franklin, James Brown, some of the who's who of, that era as far as musicians stayed at this hotel. And then as far as those retail bays, we're going to be some real placemaking involved in what really makes sense down there. I got a couple different, entities that I'm potentially working with to bring them into this deal. But this, we're going to finish these plans up and get rolling on this one before the end of the year.
Yeah. So, the next project is actually called Government Village 2, and right now it's 5 commercial businesses with a lot on the back where we can do a larger development in the near future. And what's beautiful about this is, a lot of people talk about having tenants. I got this many tenants. Imagine having Subway sandwiches as your tenant, like having a Fortune 500 company as your tenant. This is the game that we're playing, and this is already in ownership. This is already in the portfolio, and we have an amazing vision. Anthony, you want to talk about the cloud kitchen?
So with this one, I mean, and this is another one that we're gonna do what's best for the investor. So our plan right now is to tear about 4,000 square feet of this project down and rehab about 9,000 square feet until this look. But also in the last 2-3 weeks, I'll be totally transparent with you guys. Some have already invested. We have a potential. We submitted of what we would be willing to sell this at. So a broker reached out saying they have a very large fast food chain that may want to come in, tear the building down, do a land lease, or buy, this property for, and we would keep the back land. So, if they give, the number I threw out there that I would be willing to sell this property, we're gonna sell this thing and we're gonna roll that money and we're gonna keep it, keep it moving. And then potentially just do the apartments at the back, which at that time our cost basis on 1.57 acres at the back would be zero because what I told so that's one of the things that hey, we're waiting on this broker. They should have a decision within the next 2 weeks. If they don't want to do the land lease or purchase a building, they have like 2 other sites that they're looking. So we're thinking it's either like a Burger King, chicken, something like that. Is a major fast food. They couldn't tell us, but at the end of the day, if they give us that, what we told them land lease with, we'll tear the building down and we'll do 120 to 150,000 a year in a triple net land lease where, they would take care of the build everything. So for this one, whatever, if, that deal doesn't come through, we'll then go with our plans to rehab until this look that you see. But at the end of the day, at the end of the day, there's no emotion with any of this. If they want to give us $1.5 million, $2 million for just this piece, and build some type of fast food restaurant there, hey, knock yourself out. You know what I mean? So that was one of the ones that we're trying to figure out. We have a potential offer on the table. If we don't, we're giving them to the end of this month. That doesn't come through, we're gonna move along with our original plans, which we're actually already permitted to start construction on the retail space. We're just trying to see, just kind of this offer potential deal with this fast food chain just kind of came out of nowhere.
Yep. And so the next deal is Southern Heights, 60 units, and we are fighting for this deal. We already have it under contract. Seller's been playing some huge games with us, but this is actually out in Scotlandville. This is actually not in the Eddie Robinson Senior Historic District. Neither was Government Village. Government Village is what, about 5 to 7 minute drive away. And we do believe that some sort of food source should go there because the Eddie Robinson Senior Historic District is a food desert at this moment in time. But this deal is out in Scotlandville. This is where Tevin has put his stake in the ground, and he's committed to developing Scotlandville, which is about 12 minutes north of the Eddie Robinson Senior Historic District. Again, we have the contract on this amazing property. There has not been a new development in Scotlandville in terms of housing for over 20 years. The last one was built in the 90s. And so we would really love this deal. The numbers work. They're absolutely amazing. We are just trying to figure out some final things with the seller who's got themselves, because they bought wrong, got themselves in some particular situations. And we're trying to get that clear so that we would have an opportunity to take over this 60-unit development and actually redevelop it into a beautiful space and living in Scotlandville like this. This is right across the street, literally from Southern University, and we wouldn't do primarily a student housing play given what's going on with the colleges, but this would be workforce development housing. And when we say workforce development housing, we don't mean Section 8. We would happily take Section 8 tenants. That's a guaranteed income pretty much, but workforce development housing means that it is an affordable housing, that we are not designing for the high end. Okay, we are designing for literally 850 to 1050 rents that are affordable, and because we are doing the newest developments in both of these communities, our occupancy is going to be through the roof because there haven't been any new developments. So we're not going for the high end. And given that when somebody's comparing 850 at this place that was built in the 1990s and 950 over here to this new development, and we're able to offer it at 950 because of the historic tax credit, what do you think that they're going to choose? So this is Southern Heights, and again, we have the contract on this deal. But in order to get to the closing table, some things need to happen. But we're excited about it and hope that it gets to the finish line. Anything else about this one, Anthony?
No, and I just saying that workforce housing. I mean, we're really just talking about housing that's geared to middle income.
Yep.
folks, you know, upper, you know, I mean, anywhere along that middle income spectrum is
Yep.
what we refer to as workforce housing.
Yep. Next is the Eddie Robinson lots. These are right off Government Street. You can see if you step out in the middle of the street, you can see the Lincoln Hotel. And if you walk up maybe 100 steps, you can see Electric Depot and our building at 1440 Government Street. Right now, the vision for here is actually either 8 multifamily units or 4 townhomes with a small efficiency inside of it to actually start home ownership in this neighborhood. Because this is right off Government Street, this is our opportunity to actually establish the aesthetic of what we are going to be bringing to the Eddie Robinson Senior Historic District as people turn off of Government Street onto Eddie Robinson. And so we're really excited about this. It would be a brand new development, no historic tax credits, obviously, because there's no building to renovate there. But we know that home ownership is important to this vision. So it's not just us coming and just developing all these multifamily units and not creating ownership for the people who are actually there. We want to bring young Black professionals back into this community, and we want to create great housing options for them here as well. So this is the Eddie Robinson Senior. This is the Eddie Robinson lots, and so we're excited about that particular deal right there. And then finally, we've already started work, and I'll let Anthony take this one because it's right next door to the office. Anthony, tell him about 1124.
So yeah, this is a 2,200 square foot duplex that we purchased. Actually, we're turning into a triplex. We tried for a fourplex, but just what it was going to take to build to add on 700 square feet was just wasn't going to be cost effective. This is right next to where I'm doing my office for Kimball Properties Core, so we'll be right next door. So for me, this was about having control of this block and who was right next door to our office. So right now, this property is in the midst of getting gutted. New roof about to go on later this week. Once we get past some of this potential weather, which looks like we won't get much rain in Baton Rouge. But this will be a triplex. Will be about, I want to say 165, 170 in it. ARV came back at, I think, 245. So we'll have some equity in this deal, you know, to refi, you know, coming down the line with this property. But this is a property, we should actually finish this property end of the year, January at the latest, having tenants in it, you know, in the first quarter next year. So this one's rolling. I was actually over there walking through the team earlier with some demo stuff we needed to do. But, you know, we'll be back at this project working tomorrow.
Yeah, so Anthony, just from this picture, is there any historic tax credits or QREs that you can point out from this picture, or even go into some things that might be in the interior that fit under QREs?
I mean, so when you're talking about your QREs, that's going to be things like, I mean, I tell people keep things that qualify for historic tax credits. If you pick a house up, turn it over and shake it, anything that doesn't fall out. So your furniture, some of those things won't always qualify, but anything that's going to be with this building. As far as historic things that we potentially, this building actually doesn't have a lot of things that that SHPO really pushed back. We have to keep the windows. The wood doors up front, they're 6-panel wood doors, so we'll replace those with 6-panel wood doors. We'll keep the column. But you know, some of the things actually, like the porch that with a left carport, that was actually a later addition, so we don't have to keep that. But mainly with this one, like for example, if we change the windows out of this one, we would have to go back to the wood windows. But since vinyl windows have already been put in, we're fine with keeping those windows. But like as a historic building, you know, that has a bunch of things we have to keep. This is not, the building doesn't have a lot. You know, going back to like the Lincoln Hotel, you know, some of the things with that building, like they wanted literally the burgundy tile at the front that was near the glass. They wanted that type of burgundy tile to go back. Literally for Lincoln, all of the metal windows, we have to take them out, refurbish them, and put exactly those metal windows back in. So buildings like that have a lot more historic features that you have to keep. This building doesn't have a ton. Just qualifies because it's in the Eddie Robinson Historic District.
Right, got it. So just a quick summary, y'all. This is the fund portfolio right now. These are the 6 properties. Four of them are definite. 2 are in contract, and we're trying to push them to the finish line. And if they don't get pushed to the finish line, then we just find another deal to replace it. That's going to get the investors a return. So just wanted to let you know that this is everything together. These are real, tangible, physical assets that we are going to be developing, and that you get a chance to co-own with us.
And also understand we're looking at this fund, that, you know, what we're going to look to do is put money into deals like this through refis, through tax credits, through rent. As that equity comes back out, we'll take some of that money, pay, basically dividends to the investors. So you have a 6% preferred, and we'll pay that, and then that money will roll back into other deals. And some of, and some of the smaller deals will be added to this to, basically, reach that 15% IRR. And when we talk about, internal rate of return, what we're saying that is over the lifetime of you having this money in this fund, your return will average out to 15% a year. So basically, the early years, as we're developing some of the property, it might be, more 6 to 10%. But as we start getting these refi, getting tax credits, and eventually selling some of these properties, that return will go up. That over the lifetime of you having money in this fund, it'll average out to 15%. So that's what we mean when we say that 15%, internal rate of return.
Yeah. So let me just walk you through that example really quickly, y'all. A lot of you know ROI, right? Can anybody in chat type the equation for ROI? What is the equation for ROI, y'all? What is the equation for ROI? Because this has to be very clear so that you know what you're stepping into. What is the equation for ROI? No, that we know. Yep, that's the acronym for it. But what is the equation? What's the equation, y'all? Uh-oh. Where my students at? Come on, y'all. All right. So ROI is your net gain divided by what you actually originally put in. Y'all putting in the acronym. It is, there you go, net income over your original investment or cost, okay? So when most people think about what you've heard Anthony and I say 15%, which is our target for this particular fund, most people think with ROI is that they're gonna get 15% back every single year. December 31st, every single year, or September 30th, since that's when the fund closes, every single year, I'm gonna get $1,500 if I put in 10,000, okay? That is ROI, okay? That is how most people think of ROI. So every year on September 30th, if I put in money by September 30th, every year on September 30th, I'm gonna get paid $1,500, okay? And so that's what most people think, but we wanna explain the difference between ROI and IRR, okay? So IRR looks more like this, especially when it comes to real estate development. And that is year 1, the return might only be 6%, right? And then year 2, it might be 9%. But in year 3 and 4 and 5, you see that the return goes up. And overall, the average, okay, over a 5-year hold or a 5-year fund, right, is the same amount of money into your pocket. It's just that they weren't 15% every single year broken up evenly. And so why would our fund end up doing this? Why do you think the return in years 1 and 2 might be lower, y'all? Why would the returns in year 1 or 2 be lower? Okay. Let me know in chat. What do you think? Why would there you go. Thank you. Because we're still doing the developments. We're not buying cash flowing businesses, right? If we were buying a cash flowing business that then we could expect returns right away, right? When I buy multifamily real estate, most of the real estate that I buy is already cash flowing, and then I improve those cash flows, right? But we're developing things that are not functioning right now. So in the first 2 years, we're gonna have lower ROI, return on investment in the first 2 years. But then watch this, y'all, based on what Anthony broke down to you in our business model, year 1 and year 2 might be development, but then, and this is for each individual property. Year 1 and 2 development, then we sell the historic tax credits, then we do the refi, right? And so that's why year 3 might be a huge pop on like something like Electric Depot, one of the larger developments. And then we're starting to get rental income every single year after that. So you see that in these 2 examples, the amount of cash that the investor got after 5 years was still $7,500, but the return each year was different. But so IRR is the average that you get over the life of the fund. Please type clear if that makes sense. Please type clear if that makes sense. Okay, I really need you to understand this. So on September 30th of every single year, it's not gonna be you're getting a check for $1,500. That's not how this works, especially when it comes to real estate development. Okay, but you will get paid out, right, over time, over the life of the fund. That will, the IRR will be 15%. All right. So I just wanted to make that clear. So when we get into how to invest, look, y'all, crowdfunding, you can go invest on your own. And of course, in the multifamily movement, I teach you how to get a property in your name. But there's something powerful that happens when we crowdfund. All right. People act scary when it comes to crowdfunding, and there's nothing to really be scared of because you've already crowdfunded before in your life. You crowdfunded anytime you bought a pizza with friends. Anytime you bought a pizza with friends, you crowdfunded, okay? Because you could have went to the pizza shop in New York and got a slice for $2.50, right? And if everybody, all 8 of your friends, paid for a slice, then that would have been $20 for the same piece of pizza that you could have got for $16 if you bought it together, okay? You could have got it for $16 if you bought it together and just sliced it up after that, right? And that's $2 a slice. So literally, because of the economies of scale, by buying together, you would have saved 20% on the pizza. Does this make sense, y'all? Type clear if this makes sense. Okay. Does this make sense? All right, cool. So the same thing applies to real estate. You could go buy this $250 home by yourself, okay? And we could all go buy $250,000 homes, right? But if we actually just did a larger development together where there was economies of scale, then we could do that development for $1.2 million, divide it into 6, and now we've each got a home for $200,000 instead of $250,000. And so we save 20%, all of us, because we did it together as opposed to each one of us doing it separately. The same principle applies when it comes to what we're doing here with the Buyback Baton Rouge Fund. We're able to buy these larger deals that Anthony couldn't do alone, that I couldn't do alone, that you could not do alone. We're able to buy them together for cash. When we're able to make an offer via cash as opposed to a finance offer, we're able to be aggressive in our offer prices. And Anthony has been great at acquiring properties at discounted prices because we have the cash to be able to go acquire those properties. Okay, so this is the power of crowdfunding. So right off the bat, when you're buying real estate, you want to buy right. If you buy right, then we're going to be able to, the icing, if we buy right, then we've already made our cake. And then everything on top of that is icing. Historic tax credits, right? The refi, the cash flow, all of that is icing. But if we bought right, we've already got the cake. We've already stepped into equity because we're able to get a piece of real estate at a discounted price. Okay, so this is the power of us coming together.
And also that's the power of being in some of your small to mid-sized markets. I mean,
correct.
You know, the honest truth of, you know, us raising, you know, with this fund 2.75, I've raised about 3 million with my, you know, with my family and friends fund. I mean, at the end of the day, we take that money to DC, New York, you know, Oakland. I mean, it's just not a lot. It's not a lot of equity. But when we're in Baton Rouge, when we're in New Orleans, when we're in Shreveport, Memphis, Birmingham, Jackson, Greenville, Jacksonville, some of these small to mid-sized cities in the Southeast, that equity has a bigger impact, and actually, you know, it goes to being, you know, a bigger fish in a smaller pond, or being a small fish in, you know, in this huge pond with a lot of competition. Like, you know, I would love to do sexy deals in Austin and Los and stuff like that, but if I'm buying at the, you know, with no discount, I'm paying, you know, premiums for construction and stuff like that. Yeah. I mean, it looks good, but are you really making, you know, are you really generating that yield? And, you know, us, you know, the biggest thing is generating that yield to, you know, pay our investors back and also, you know, continue building our portfolio.
Exactly. So a lot of people have been wondering how you get paid back over time. And I just want to be clear that this example that I'm about to show you is not.
This is from a fund perspective. I told you, you know, because could be deceiving. I'll walk through this. This is, you know, so this is one deal equity goings into, and like I said, we may need to, you know, kind of really more detail this out, because it won't be a situation that, hey, you are going to be returned 25K. No, like this is from a fund perspective of money going into the fund, that money going into one deal, for example, potentially Julia Street, and then that money going back into the fund. We can't pay all of that initial principal just back out, because at the end of the day, this money needs to wash and repeat, you know, going forward to be able to produce that IRR that we're looking to do.
Yeah. So yeah, that's very important. And so I want to walk you through We've already explained to you the 4 ways. Does anybody remember the 4 ways that you get paid in this particular fund? What are the 4 ways? And again, this is just an example. These are not hardcore dates, okay? These are not hardcore dates. We do have a project timeline, and I'm going to show that to you, but these are not hardcore set in stone dates. The refinance, the tax credits, when you sell and rent. There you go. Linda got it, okay? So this is just an example of what an investment would look like on the fund level. So let's just say we as a fund invested $30,000 into a property, okay? Now that's 1% of the, that's about 1% of the fund, okay? Then we go do our developments, okay? We go do our developments, and then with the historic tax credits, be based on what we were able to get for that building, we might be able to monetize enough tax credits to get $25,000 back as a fund on the fund level, okay? And then from there, we have to do 90% occupancy for 90 days, right? And then we can go do a refinance into a long-term Fannie or Freddie. When we do that cash out refi, because we force so much appreciation, we may now be able, right, to get another $15,000 out on that refi, okay? So now we've literally gotten a full return of capital. We're actually up at this moment in time. And then from there, we have our dividend payments that go from that capital that we're getting from operating income, right? And some of the return of capital, we will determine how much we distribute out to investors as dividends and return of capital for them as individuals. Of course,
Some of our deals are going to be, really good. For example, we're looking at the triplex next to our office space. With what that project, the ARV after repair value at 245, we were able, when we finished development, construction closing, our construction loan, the bank was able to give us back pretty much our full purchase price in the construction loan. So those are some of the things with being able to buy under market value, add value, and get, some of these ARVs that we're looking for, where now, a lot of times our purchase price. So once we get to the point of selling the tax credits with this deal, even before it's rented, we'll for sure have all of our money back out of all the equity. So that equity will roll back into the fund, and then it'll roll back into another deal.
Yep. So let me break this down for you all, okay? Look, if we go start a lemonade stand and we go get sugar, Dixie cups, water, and lemons, and we're able to make lemonade for $1 a cup, but then we're able to sell it, we force the value of that, right? By putting those ingredients together, we force the value to $2, right? Now we've sold a cup of lemonade, but we're up $1. Now we have a choice once we're up $1. We can say, oh, I'm gonna pocket that and I'm gonna go buy something. I'm gonna go buy something at the Apple store, right? Or we can say, I'm going to invest that $1 to expand my lemonade stand. So as the fiduciaries of this particular fund, Anthony and I will make decisions around what we do with the extra dollar that we created by forcing appreciation, whether we actually take some out to return capital to investors, or if we continue to expand the pie for everyone. Does that make sense? Please type clear if that makes sense. That is our responsibility as fiduciaries and as stewards of the money that you've blessed us with to be able to execute on this vision. And on top of that, I will let you know that I have significant amount of money into this, and some of my best and closest friends are also in this fund. And as Anthony said, he has family and friends.
I mean, I was explaining this to Junior earlier because he didn't even understand this because he was asking me. I was looking at this property earlier, and he was like, "Oh, that sounds like a great deal. Are you buying this for your personal portfolio, Kimball Pride?" I was like, "No. If I do this, this is going to be part of the fund because at the end of the day, I look at it as a accountability thing of if people are going to invest and put money behind me, that I shouldn't pull the best deals out for myself. So like I was telling him earlier, anything that I do moving forward real estate wise, unless it's like my personal home, my office building, I don't want those type of things in part of the fund because at the end of the day, those things don't have great returns. And those are things that at the end of the day, I don't want to be paying a $5,000 a month lease, from my office building just so I can produce a return. I would rather go find a project and, pay $1,200 a month for my office building, which what my market should be on my office building. But, I look at it we're going to, I mean, literally 20 minutes before this call started, I was looking at a house that potentially could be a smaller deal that we'd include in this fund, a property that we can, purchase maybe for $100,000, put another 50 in it, and we have a rentable triplex in like 60 days. So at the end of the day, you know, this is everything I'm doing real estate development, you know, moving forward, between the fund vehicles that we've raised this year.
100%, 100%. So, how much are we raising, y'all? Right now, we are raising $2.75 million, and this is what it looks like. This is the capital requirement for each of those 6 properties. Right now, the properties that we have acquired are in Kimball Properties funds, and they will be sold to the Buyback Baton Rouge fund at cost. We are not putting any markup or any premium on what we got. Anthony's held Government Village for 2 years, and he is not selling that to the fund at any premium whatsoever, even though it has appreciated. Okay, so those properties will be transferred from Kimball Properties, the ones that we've acquired thus far, into the Buyback Baton Rouge fund at cost. Okay, so I just want everybody to be clear on that. And then the 2 properties that are we are under contract and we're trying to get to the finish line, those will actually be purchased by the Buyback Baton Rouge because they will close after September 30th. Okay, so we're gonna get to questions.
And also just understand some of the things that we're doing, like for the Eddie Robinson lots. You know, we're gonna potentially get these lots at a great deal, but I've literally hired this lady, a lawyer and a private investigator, because one of the 3 lots has a title issue where she has to find the previous owner and get him to sign over his equity into the deal. So at the end of the day, these are some of the things that it takes to put a good deal. I've literally been working with this lady now for like 6 months, where, you know, I put her in touch with a lawyer. She's hired the private investigator to find the previous owner. And like all of that is worth it to be able to get these lots that I think it's like $40,000 we would pay for all 3. So those are the things that, you know, it takes to sometimes get a good deal done. You know, so those, at the end of the day, those are the type of deals. And I tell people, I may look at 40, 50 deals a month. And, you know, we usually move forward with like 1 or 2 of them. And like, that's the type of due diligence and, you know, things you have to go to find a deal that makes sense.
Yep, 100%. So these are our timelines right now. Again, the timelines are tentative and they are moving, but this is what we are almost certain of is the time to develop, and we are trying to hit these target start dates, okay? So remember, each property has its own timeline. Okay, so this is not, so of course we've already started on 11/24. What happens when we're done with construction, y'all? What happens when we complete construction? Who knows what happens when we complete construction? What do we do to start to help you get return?
Refi, rent and refi.
We refi and we sell the historical tax credit, the historic tax credits, right? So we sell the historic tax credits, right? And then we do refi to long-term Fannie or Freddie, okay? Then we start renting, it out, right? And then we're getting quarterly dividend payments, okay? People are asking how often do we get paid? It's going to be quarterly dividend payments. And Anthony and I are going to be taking the cup of lemonade and saying, we made $1 from this cup of lemonade. How much do we want to give back to the initial investors at this moment in time? And how much do we want to invest to keep up with this momentum, right? So that is going to be our responsibility in order to continue to expand the economic resource that you provided. Now, we want to share something with you as you consider how much you're going to invest, okay? So basically, this is how we see it. We want to be 100% transparent. We do not want your last dollar. We do not want your last dollar. This is not the type of fund where you can call and 3 months later say, Julian, I got a family emergency. Can I get my money back? No, because where will your money be, y'all? 3 months from now, where will your money be? It'll be in the walls of a property, okay? It will be in a project, okay? So this is not that kind of thing. So we do not want your last dollar. So what should you invest? How much should you invest? Okay, 1, you all need to have an emergency fund. COVID has exposed a lot of people and they had no emergency fund. 78% of Americans live in paycheck to paycheck. Okay, so this is not just a black or white thing. Black people only make up 14% of the country. This is a group of people, powers that be, that are trying to oppress the rest of the people. Okay, 78% of Americans living paycheck to paycheck. So the first thing we want you to have is an emergency fund. If you don't have an emergency fund, then this is probably not the best investment for you. Okay. The next is your living expenses. We do not want you to cut into your living expenses to invest in this particular fund. This is not what you should do. Okay. Do we believe that you should decrease your living expenses if you have no breathing room whatsoever? Yeah, you need to figure out how to decrease your cost basis. Okay. But we do not want you to cut into your living expenses in order to invest in this fund. Third, if you have not invested in yourself, in your own growth and development, whether that's personal development or business development, then we encourage you to do that first. And if you do not have, if you have a business that is growing your money at more than 15%, then we encourage you to go ahead and continue to expand your own business before you invest in the Buyback Baton Rouge Fund. If you have a business that is growing at least 15%, then you should invest in your business, okay, before you invest in the Buyback Baton Rouge Fund. Now, if you have those three things taken care of, from there, if you have savings in a savings account that is at the bottom of the savings account that you know you will never touch, or your money is in some low yielding stocks, when you go look at the historical return of your stock portfolio, then we believe that you should take that money that's in your savings account in these low yielding stocks, put that in Buyback Baton Rouge, and let us multiply it for you, okay? And then ultimately, as Anthony was talking about, in terms of getting free, you get free when your assets, okay, your assets are paying for your lifestyle, not you busting your ass. Okay, when your assets pay for your lifestyle and not you busting your ass trading time for money, that's when you get free. And so for many of you, this is going to be your first opportunity to have passive income. If type me in chat if you have passive income, and type no if you have no passive income whatsoever. Okay. So I would say it's about 60-40, no passive, about 40% have passive. Actually, it's more now. The no's took some time to show up. That's all right, okay? So this is just your first opportunity to change that, okay? So how do you invest? We're gonna take questions in just a second. How do you invest? To invest in the crowd fund from 1,000, the minimum investment is $1,000 to up to $5,000. You can go to buybackablock.com. I'm gonna put that in chat. That is buybackablock.com, buybackablock.com, and you will invest through a platform called Buy the Block, okay? This is our Reg CF crowdfund. It is SEC regulated, so we are held accountable by the government in order to make sure that we are being transparent, that we are submitting the right documents, that we're using the proper accounting methods on behalf of you, the investor who the government is seeking to protect. With the crowd fund, you do not have to have a pre-existing relationship with Anthony or myself, okay? And so if you are ready to do that, that is buybackablock.com. We're gonna take questions in just a second, LaShawn, okay? The next way to invest with us, if you have a pre-existing relationship and are seeking to invest more than $5,000, is to go to buybackbatonrouge.com and scroll to Q5. Q5 are the frequently asked questions, and then go look for an organization called GameVest. GameVest is our financial intermediary for our Reg D fund. With our Reg D fund, we have 3 funds: Buyback Baton Rouge 1, 2, and 3. Each fund can only have 35 investors. We are already on funds 2 and 3 are open and ready
35 non-accredited is what
35 non-accredited investors, excuse me. 35 non-accredited investors. Fund 1 is already full, okay? They're all going to the same portfolio. There's no difference between fund 1, 2, and 3. There is no difference between fund 1, 2, and 3 except that number. They are all going towards equity in the same exact portfolio.
And there's no difference if you invest $1,000, $5,000, or $100,000. Some people, you get no, like, I mean, all returns are pro rata based on your investment amount. So there's no premium for someone who invested 10,000 over somebody who invests 1,000.
That is correct. Okay. And so when does this opportunity end? It ends in 16 days on September 30th. The fund closes. The fund will close, and we will focus 100% of our efforts on actually doing these developments and making your money work for you. We do not want to be in a constant phase of fundraising, and so the fund will close in 16 days. For some of you who are trying to draw money from a 401k, we have the instructions on buybackbatonrouge.com. It's going to take you a couple of weeks to do that. So you're going to have to get started literally within the next 2 days to make sure that those funds get to us in time to be part of the Buyback Baton Rouge fund. All right. So with that, if you go to buybackablock.com, you're gonna see our page there. Okay, you'll first and foremost you will attach a bank. That is the first step, is to attach a bank. Okay, and then once you attach your bank, you'll select your bank. Then you will use instant verification or a micro deposit of like 2 cents and 5 cents, and then you have to report that deposit. And then you'll use your online ID. Okay, this system is fully integrated with your banking system. Okay, it'll ask you for a text message. Then you put in the routing numbers and things of that nature. Now your bank will show up. Then you need to click this bank as your verified bank, and then you can go back to the page and then select how many shares you want to buy, 1,000, 2,000, 3,000, up to $5,000 in shares via that particular process. Okay, you will go through this quick questionnaire. Then you'll proceed to invest, and then payment will be pending, and it'll let you know when that payment has come through. Okay, now if you go to GainVest, if you're investing 5,000 or more and you have a pre-existing relationship with us, for all of my multifamily students, you have a pre-existing relationship with me, and if you're investing 5,000 or more, you will go to, again, Q5 of the frequently asked questions on buybackbatonrouge.com. All of these steps are listed there. GainVest, you will create an account. You will see Buyback Baton Rouge Fund 2 or 3 there. Okay, you will then sign a subscription agreement, right? I will get that subscription agreement sent to me. I'll countersign. When I countersign, you will GameVest will verify your identity. Then they will send you the routing number to send the money directly to the Buyback Baton Rouge Fund, and from there you will be set to go. It's pretty simple. Okay. Any questions, you can email me. Now, Anthony and I believe in transparency, but not only do we believe in transparency, we believe in educating you along the way. Some of you are going to replicate this in the market that you are in. Some of you come from some small places in the South where this can be done. And so we want to educate you along the way. And so we're doing that, and we're sharing every step of this journey through our How to Buy Back the Block Facebook group. Okay. I don't know any other fund. I don't know any, even these companies, right? When they have their corporate calls and things of that nature, they're not showing you the day to day. Anthony and I are documenting this journey. Anthony, Tevin, and I are documenting this journey day to day to show you how it's happening, how your money is working for you. This won't just be some quarter. We will have quarterly calls, but we are showing you every single day through video what we're working on, how your money is working. And so, and we're also educating you along the way. We want you to be sophisticated investors, okay? Not just in real estate, because Anthony and I are gonna go beyond real estate soon, okay? So we already are, but together we're gonna go beyond real estate. So we just want you to be in the wealth consciousness. We are a little bit further along the journey, on that journey than you, and we wanna bring you along. Okay, and so this is what we are committed to. And so with that, we want to say thank you so much for being here tonight. If you have any questions, do not email Anthony. Unless you know Anthony from high school and you've known him for 20 years, do not email Anthony.
Jules is the fundraising guy. I mean, I'm not the best. It's something I'm trying to get better at, as far as being responsive to emails and stuff. My team pushes me to do more social media.
Anthony good at email, but he is so focused on.
Yeah, I mean, I like development. I mean, we each have a role, and one thing I did want to add to ending this is, for us, this is about developing an ecosystem and developing community. Whether you're in Baton Rouge or whether you're New York, as far as folks working together, and just as we may be further along on understanding in our real estate journey, we may have other people in this group that that know asset classes that we don't. And for me, this is about ecosystem, building community, and group economics. So while I'm just as open to, like, as I'm bringing you guys into my real estate world and what we're doing, hey, we're just as open to some of you. Hey, bring us into your world if there's ways that you know how to make money. Because at the end of the day, that's the support we all need to have for each other to really, especially as a Black community, take things to like the next level and start getting some of this equity into some of these assets that that we're capable of. I tell people we if the Black community didn't have spending power, you wouldn't see all these other nationalities putting their stores, convenience stores, and doing some of the things that they put in our community. So it's not that we don't have spending power. We just have to know how to spend that money and invest and work together. And that's, you know, outside of the real estate, the tangible assets, that's what's more important to me is the ecosystem that we're building.
Yep, 100%. So with that, we're going to take some questions real quick. Some questions that I already know came up. What's the minimum investment? It's $1,000. If you're going to invest $1,000, you can go to buybackablock.com. That will take you to buytheblock.com, and you can invest there. How long is the holding period? For the federal tax credits, it's actually, no, state is 5 years.
Federal is 5 years.
Federal 5 years. So it's definitely a minimum 5-year hold, okay? So we're going to try to get you an IRR of 15% over at least 5 years. And after 5 years, Anthony and I will evaluate what is the best use of everyone's capital to and including our own, and we will decide from there what to do with the portfolio, okay? How much is the sponsorship team investing? I'm personally putting in $300,000. Actually, my $300,000 is already into the fund. Anthony's rolling over some money from his Kimball properties. And so we are actually, when you add the sponsorship team's funds into the deal, we're actually already at $2 million. Okay, so when you go to buybackablock.com, you're only going to see about 100 there. We opened up the crowdfund because we wanted this to be accessible to anybody who wanted to be involved. But we've actually raised more money through our personal networks, family and friends, and we've already raised about $1 million through the multifamily movement. Okay, so so what you're seeing on the websites don't actually reflect everything that we've already raised. We're actually around $2 million right now, and we have a pending larger partner who may come in with 750 to close us out. So so that's that. And then what type of a loan are we refinancing to? Is going to be Fannie or Freddie, non-recourse 30-year term. And then are you accepting 401ks and IRAs? Yes, we are. A GainVest will help you with that. And right now the IRS is waiving through the CARES Act, the IRS is waiving the 10% penalty for early withdrawal. So all the instructions for that or IRA or 401k are in the frequently asked questions at buybackbatonrouge.com. So the way you're going to ask questions tonight, we'll stay on for another 20-25 minutes to answer as many questions as possible. I already see questions in the Q&A function. We want you to use the Q&A function in Zoom. Okay, I know you've asked questions in chat. If you can find your question, copy it and put it in the Q&A function. We're going to answer questions in order there. This will allow us to make sure that we don't miss any questions. All right.
I'll start going down the questions. I'll see the first one. How has COVID affected this project? I mean, it definitely has made us more conscious on the commercial. You know, there's been some good and bad, you know, while on the commercial side, definitely have to be more conscious of placemaking and finding tenants that fit, you know, the new environment. But I will say on the residential side, I mean, if you talk to more title attorneys and stuff like that, my title company has did the most closings within a year. They broke their record in August for the year. So the housing market has been a lot more stable than people thought it was going to be, even I would say myself. So as far as potential rental tenants in that middle income workforce housing, I really wouldn't say it has impacted the project. Where we are seeing some potential project impacts on the commercial side. When you get so we'll start doing dividend payments about 12 to 15 months once from the fund closing is when we'll start doing those dividend payments.
How have you dealt with severe weather over the years? How does weather affect buying decisions? That's a great question. So we definitely make sure that all of our properties are insured, and we insure them properly so that if we were to lose the asset for whatever reason, that we're going to get full recovery or compensation for that property. Anything else regarding that, Anthony?
I mean, and then it just really comes down to insurance. And I mean, at the end of the day, I've been, you know, knock on wood, I've never had an insurance claim where, you know, we do the construction. So, I mean, potentially, like at the end of the day, I feel like our construction numbers are always under what we potentially get in that insurance claim. So, I mean, I've never had a situation where because of a storm, even the house I actually live in now, a tree fell on, you know, some years ago. And at the end of the day, I mean, it wasn't a bad situation for us as far as, you know, the insurance claim versus what I was able to do the construction for.
So,
What's
next
next?
is what is considered the life of the fund. So right now it's 5 years, and if in 5 years we believe that we can still be getting you 15% or greater returns, then the fund will continue, and we'll continue to reinvest and flip the money over and over and over again until we feel that for whatever reason, real estate in Baton Rouge is not the direction for us to multiply your money. So right now it's 5 years at
Yeah.
least.
Can I include my daughter's name? I mean, you would have to go to a bank and get, so all you need to do is set up a custodian account to invest in someone under 18. Not a very difficult process. Go to your local bank where you have a checking account. Tell them you want to set up a custodian account, and basically that allows you to invest in, your kid's name. And then when they turn 18, they'll have, ownership, over that. Return be for some 15%. I mean, $1,000, 15%. That's $150.
Yep.
But 15% over the life of the fund. Who decides when payouts? I mean, that's going to be on us. And at the end of the day, what you have to understand for us, for IRR is that, is over the life of the fund. But if we waited 2 to 3 years to start paying those dividends, it puts us in a situation where we have to deliver more money to catch up for those first 2 years. So as soon as we can start paying out money, it actually benefits us where, we don't have to have these crazy returns in the latter year to get to that 15%, IRR.
Got you.
So it's just
Is this different than Buy the Block? Buy the Block is the crowdfunding platform. This is actually a fund on that crowdfunding platform. So this is different than Buy the Block. We are buying back the block in terms of like the hashtag and the common language. Is specifically, actually, we're buying back a neighborhood, not just a block. So we actually own a couple blocks in the neighborhood already. Dwight, do you have any plan in place to reinvest dividend return back into the fund automatically?
I mean, that would work through GainVest. GainVest is a registered SEC advisor. So as far as if you want that dividend payment to go back, you just would work with GainVest, and that would be put back in, and they would keep the accounting for that over the life of the fund.
Got you. Moto Supra, regarding IRR, will this be compounded interest basis or only annual interest or original investment on an original investment? And so it'll be on your original investment. It'll be on your original investment. It's not compounded unless you can choose to accept. If we make a return of capital and you say, I want that back in, then you're starting to compound. But this IRR is based on your original investment. Now, what IRR does not calculate is anytime that we return capital to you, because now if we return capital to you, what happens to your original investment? It actually goes down, right? So IRR doesn't actually calculate everything, but this is based on your original investment. But there will come a point in the fund, we believe, where you will have all of your capital returned and you will still be getting paid, all right? Tamika, for clarification, the qualifier to invest is more than 5K to have a previous relationship with you. The qualifier to invest more than 5. No, Tamika, you can invest. Oh, yes, that is required by the SEC. That is required by the SEC.
So they can't invest more than 5K through if they're non-accredited going through the crowd fund.
Let me see. I don't know if I put I think I'm put the highest package at 5K on Buy the Block. I'm double checking right now. Oh no, there's 10K. There's 10K on there, Tamika. There's 10K. And Tamika, if you wanted to invest more than 10K, then I can go into the back end of Buy the Block and create one for you based on how much you want to contribute. Okay. Thank you, sister. Can't use a credit card, only a bank account. Yeah, we do not want you to pull this off of a credit card. That's a red flag if you have to pull this off a credit card. So please don't do that.
Opportunity zones. Opportunity zones has been a hot topic. While these projects are eligible for opportunity zone capital gains, if you have those capital gains, what most people don't really understand, like hadn't really kind of fussed out a lot of times about opportunity zone is like, unless you have a capital gain now, let's say I invested 50K in the stock market years ago. I'm really getting ready to pull that money out of the stock market. My portfolio is worth 100K. I have a $50,000 capital gain. You have to have that capital gain to be able to now, put money into this and use this opportunity zone program. If you don't have the capital gain, I mean,
Yeah.
it's null and void.
Yeah. Will you be providing quarterly reports? Yes, Velma, we will. We'll be providing quarterly reports. And then, of course, we are operating in transparency through the Facebook group. But you will have, and then every year you're going to get a K1. You need that K1 to file your taxes and to show what your ownership stake is in the Buyback Baton Rouge Fund. So you'll get quarterly reports and updates. We'll probably have calls just like this every quarter, and you'll get your K1 document every year.
What kind of documents do investors receive? We just talked about K1. As far as the initial investment, you'll have an operating agreement that you're assigned that talks about the operations of the fund, and you'll have a subscription agreement that explains the shares and what you're actually purchasing. So those things, whether it's through GainVest or by the block, you will be provided the operating agreement that you'll have to sign, a subscription agreement that you also will receive. That you receive a copy of. Can you roll over our dividend? Yes, that would be working with GainVest or buy back to block.
LaShawn, we can't. So LaShawn, can we do an initial investment of 1,000 and continue to put money into the fund each month, like stock investment? Unfortunately, LaShawn, no. The fund has to close because this is with the stocks. The stocks have a value and it fluctuates. There's actually no market for buyers for this, so you can't come into the fund later. It's like you came in on the ground floor and you wrote it out with us. If you try to come in a month later, what is the value of the fund, and is the risk the same a month later or a year later? No, it's not, right? Because the properties will have been developed and things of that nature. So no, once September 30th comes, this fund will be closed. Might there be other funds in the future? Yes, but this particular fund will be closed. 401k in part from my bank. How do I get this done? So that is in Q&A. That is in the frequently asked questions of go to buybackbatonrouge.com, buybackbatonrouge.com, and go to question number 9, frequently asked question number 9. It'll show you all the steps, the 3 options you have to draw money from your 401k. Again, that is buybackbatonrouge.com. Scroll down to the frequently asked questions and go to Q9, and it'll to show you exactly how to use your 401k. Okay, you actually have 4 options. Will you receive a yearly tax document? Yes, K1. Other than being a multifamily movement member, what else qualifies current relationship? Jeffrey, if you're a multifamily movement member, then we have a pre-existing relationship, so you're good to go. And obviously, through the multifamily movement, I've been training you to be a sophisticated investor, so you were good to go. We have an established relationship. Can we reinvest? Yep, we already talked about that. Clarissa, is it better to roll your existing 401k into an IRA before investing? You need to talk to a financial professional or a financial advisor, Clarissa, to see what's best for you.
Or your accountant. They would be better at just looking at your personal tax
Correct.
financial situation and making a decision. They would definitely be more qualified to make that decision.
All right, Cicely, are you looking at healthcare with any of the projects?
Yeah, I mean, definitely something we're interested in getting in. Is for us, we're not operators, you know what I mean, but we do look for, a strong healthcare partner would be definitely an industry. And I mean, from the shopping center with a potential urgent care to another building that we own on government that's part of my Kimball Properties Fund, we have looked at potential healthcare tenants because those are very COVID-friendly businesses. And also just understanding potential soft funds, government funds, potentially HUD is going to have money for housing and stuff close to healthcare or, in partnership with healthcare moving forward. So for us, those type of things is just really pushing that placemaking forward and finding the right potential partner.
Yep. Ronald, if you're having issues with buytheblock.com, their email is support@buytheblock.com. They're very responsive. I talked to the founder today. So be patient and we'll make sure that you get in definitely within 16 days. We're going to figure that out. So yes, just stay tuned and we'll keep an eye out on your email for that, brother. Does SEP IRA transfer apply to 401k? I believe it does. Let me show you. I'm going to share my screen really quickly to show you where all the where you can get all the information on stop share share screen. I'm going to show you get all the 401k information. You go to buytheblock.com. You scroll down to Q9. Can I use my 401k? You have 4 options. You got option 1, loan to self from 401k, easiest option. Option 2, traditional IRA with custodian. Option, why is that? Why did I do that? And then option 3 is solo 401k for self-employed entrepreneurs, and then option 4 is the checkbook self-directed IRA. So those are all your options. Again, that's buybackbatonrouge.com, and it's Q9. Okay, keep it going. What's the next, Ant?
Which one? Let me see where we at. I think I lost track.
Okay. So Baton Rouge is not a flood zone.
I mean, well, no, I mean, this area we're working in Baton Rouge, I mean, in every city they're gonna have flood zones. I mean, no whole city, even not even New Orleans is the whole city is a flood zone. I mean, the natural settlement of New Orleans on the river. Most people don't realize downtown, uptown, Marigny, Bywater, none of that flooded during Katrina. Historically hasn't flooded. So I mean, where we typically work at in Baton Rouge is I try to stay out of flood zones, but also understand like most whole cities are not flood zones, or you know what I mean. How far are we from the Gulf? I mean, it's hundreds of miles. I have no clue what the exact distance. I mean,
You gotta remember insurance. We always making sure our buildings are insured. And Katrina, people literally, Katrina was so crazy that some people only had 1 foot of flooding in their home, and they got paid out for the entire home. So some people actually came up financially as a result of their insurance policy. So we're protected, y'all. We're making sure that we protect you and the asset. Okay. Can I use PayPal? I do not believe that you can use PayPal with Buy the Block. At the end of 5 years, if you decide to close the fund, the worst case, the principal has not yet been returned. What happens? Must you liquidate or refi, pay back investors? Yeah, we would have to liquidate the buildings and the assets and get you back as much capital as possible. That's worst case scenario. That's not going to happen unless something getting happen.
I just don't see, you know, especially with some of our initial purchases, getting those under market value. And you know, people, you know, say, you know, it's like, you know, like what if, you know, like, you know, COVID continues, or, you know, the economy totally crashes. Like at the end of the day, we protect ourselves, do understand that this is risk involved in investment. There's no guarantees here. You know what I mean? And that's part of investing. But, you know, some of these things, tax credits, good lending partners, not being in flood zones, personal relationships to be able to get these things on the market value. Some of those things are things we're talking about, these things because these things are things that mitigate the risk, but also understand it's like once you do put yourself in preparation and, you know, make sure all your properties are insured. Like, you know what I mean? Like, it's crazy. Like people reach out to me and they're like, "Oh, this dog coming." Like, all right, what? I'm like, actually, I hadn't thought about it because, like, at the end of the day, we have insurance. Like, you know, so I'm not gonna get I'm gonna spend bandwidth on like things that like push things forward. Sitting and worrying about things that you are properly prepared for is like kind of insane. You know, so you prepare, you make sure things are, you know, you have the proper insurance. You look at, you know, lessons learned from things like Katrina and make sure like, hey, it's not only flood insurance. It's, you know, making sure you have hazard insurance. But once you know one of those things and you know you are prepared, you spend your bandwidth on things that, you know, can make these deals better.
Yeah. What does exit look like in 5 years, Anthony?
Either refine, selling, you know what I mean? You know, potentially, hopefully by that before the refis, we have that principal already returned. But I mean, it's going to be either selling, refine, or something like that. I mean, that those are, you know, just continuing to fund, say, hey, we're going to continue this 2 more years because we are getting solid returns and that principal's already returned. But I mean, those will be the options for closing the fund.
Yep. The fund does close September 30th. So that question keeps coming up. September 30th will be the last day to join the fund. Okay. How do I let you know I would like to reinvest any dividends? So Andrea, we will, when we send you either a mailing or anything like that that says you are about to be returned a certain amount of capital, or we actually just send you a check, then you will have the option. Actually, no. Before we send the checks, we will there'll be communication between us and the investor, and you can say, I would like to check or I'd like to reinvest the capital. So you'll have that decision and it'll be clear. Can we invest via an LLC versus investing as an individual? Yes, you can, Al. When you go through the paperwork on GainVest, just put your LLC as opposed to you as an individual. Can we transfer ownership out of our investment certificates if needed?
We don't have a secondary market, set up. If you're talking about transferring from maybe your personal to like a holding company, once you get set up, that would be working with GameVest to just turn over those subscription documents and get those transferred. But as far as a secondary market where someone could potentially buy your shares, we don't have that set up.
Yeah. Raymond, the supplied credentials are not authorized for this resource. I'm not sure if you're using GainVest or if you're using By the Block. If you're using By the Block, email support at bytheblock.com. Unfortunately, we don't control that technology, so we can't mitigate that error for you. But again, their customer support is great, and they'll get back to you as soon as they can. Okay. Um, uh, Yes, we will send out the recording of this so that you have it. In fact, I'll put it on the buybackbatonrouge.com page tomorrow morning. I just joined the multifamily movement this past weekend. I'd like to learn more and equip my skills before I get into this. I'm very interested, but do you anticipate any future opportunities after September? We're going to be ready. Welcome to the multifamily movement. We're going to be locked in on these developments for the time being. So we will raise capital again when we see a whole bunch of opportunities that we need to raise capital for. Right now, we're going to be trying to deploy all of this capital and making sure that it's working hard for all of you. So it's
We have
okay.
some opportunities that we're looking at Shreveport, Houston, that we potential, but this is, our main focus right now is the initiative that, that we're closing on the end of this month.
Okay, Raquel, Buy the Block is the investing platform. Buyback Baton Rouge is a fund on that platform. Okay, Buy the Block is just a platform that we're using to raise money. They've invested in the software, the technology, the relationships, the back end to be able to receive money from investors and to make sure that all the funds on their platform are regulated. And we are a fund on that platform. So two different entities. It's unfortunate. In an unfortunate event of death, what happens to your investment? That would happen. That would get transferred through your will or your estate plan. Okay, that would get transferred through your
And
will. Yeah.
It's also
Oh, you're
for
breaking up.
me to have partners like Julian and Tevin, in case something. I'm finishing up my will, but I have my life insurance. And I have, if anything happens to me, I do have a plan that goes into place as far as with Julian and Tevin that we're setting up. But that's important of wills, trust, and those some of the things that I'm learning about and putting in place, as far as, but as just as important as like investing, life insurance, wills, those are things, especially as a Black community, we definitely just need to prepare because death is inevitable.
Yeah. Do you intend to keep the projects? Anthony and I right now, we are buying holders. We are buying holders. But 5 years from now, Velma, if we see better opportunities, for instance, let's say technology, let's say it's I don't know what can happen. You see how quickly the world can change. If we see a better opportunity for investment and the multiplication of money 5 years from now, then we will let you know about it, and that'll be the direction we're going. But right now, Anthony and I are buying holders. And so that is our thesis at this moment in time.
And as far as that dividend payment, as far as the return capital,
Yeah.
discuss that with your accountant and then make sure, as far as levels you're going to be at taxed at, and, that that you have a clear understanding from your accounting professional. And that's another thing that's really important that, make sure, as, you have these people from legal to accounting that have their niches and understand their role, and that that they're continue to improve their knowledge with tax code as it continues to change. I think around this election and moving forward with some of the with COVID and some of the things that taxes are changing is very important. Meeting with your accountant. I try to meet with my accountant moving forward. We're meeting bi-weekly. We went from monthly to bi-weekly, just so personally and with our businesses, we can stay on top of it. And definitely we express to you guys the importance of that transfer investment to another family member like
Yeah,
daughter.
we did that one. Until what happens to our money if a bigger investor you mentioned earlier invest 750,000 before September 30th? If we reach, so Anthony and I have deals that we believe we need 2.75 for. If that investor comes in and closes the gap for us, then we will close the fund. So it's not just September 30th. A lot can happen in the next week. What the reason we went through all the process to open up the Reg CF crowdfund is because we wanted as many people in the community to have access to this opportunity as possible. People who rarely ever get to sit at this table. Anthony and I, we could have actually just went and raised this money from our network of friends and family because of the relationships we've been able to been blessed with due to going to Stanford and things of that nature. But we didn't just want to do that. We wanted to make sure that this was accessible to everyone. If people do not move on this low tier of investment at $1,000, as low as $1,000, and we actually get the capital for this vision from a larger investor, then we will take it and the fund will be closed. So, but we did this intentionally to make sure that as many people that wanted to be involved could be included in this vision as possible. After 5 years, are you cutting us loose?
We discussed that, you know,
Yeah,
we will
yeah,
either close the fund or continue to fund. And that's something, you know, we're going to be very transparent with investors about. And, you know, there will be some optionality there. Same instructions of 403B, 401k. Julian, you probably know more about
yeah.
that.
You want to call one of those numbers or one of those providers on buybackbatonrouge.com. Frequently asked question number 9. Call one of them and see. I don't have the answer to that. And the last question of the night is: are you already looking ahead as the project is smoothing out, scouting for the next project? Anthony looks. He said he looks at about 40, 50 deals a month, and we usually find 2 gold mines within there. We are always looking for deals because we know that once we get return of capital, that we're going to need that money to be working. We want to hold some capital for like just any thin periods or where all the money is out, right? We want to hold some capital, but anything beyond that kind of working capital, we want it to be actually out multiplying into another deal. So we're always looking for the next deal. And you see the 6 properties that we have here, but over the life of this fund, we actually may have invested and sold up to 30 properties over the life of this fund.
I
Okay?
definitely see 30, 35 properties. You know, like I said, I have one deal, you know, smaller deal, where potentially, you know, looking at buying a house is crazy. I was buying the house for like 30 grand. House probably worth like 50. And then the deal got sweeter because the lot next to it was vacant. It had some title issues, but I ended up finding a guy already, and he's going to transfer his equity over on that lot to me for $500, which is crazy as hell. But he didn't even realize he owned the lot anymore. So that's a deal that but we're always looking for deals to add to that. That's what I kind of explained earlier, that there are definitely going to be smaller deals, and like this property, if we can get this property and this lot for 30 grand, maybe put another 50 in, and this thing appraised potentially 175, 200, where we can pull some equity. I'm always going to be looking for those small deals. And those type of deals, that happened because initially started, I saw the house, I told the guys, hey, if you can get this house at this number, which was like 10%, 15% decrease in what he had listed, I was like, I'll close in 7 days. I have the guys to do the inspections. I have everybody set up that I can get in and do my due diligence quick. And now it looks like just going to get that house and the lot next to it for, under 30K. So we're going to be always looking for deals to add to this to, make this sweeter for you guys.
Yep. And so the last question: what does pre-existing relationship with Anthony and I look like? If you got our phone numbers, you likely have a pre-existing relationship, or if you're a multifamily movement student, then you have a pre-existing relationship with me. All right. So with that, we've reached 9 o'clock. I want to say thank you, 9 o'clock our time. I want to say thank you so much for being here tonight. Again, the fund closes on September 30th. You got 16 days to make a decision. For $1,000 or $10,000, you can go to buybackablock.com and invest to buy the block. If you have a pre-existing relationship with us or are going to do more than that, then you can go to Gainvest, which you can find at Q5 of buybackbatonrouge.com. So again, thank you so much for being here. We would love for you to be on board with us as we execute on this vision. It's going to be a wild, wild ride. It's going to be fun, and you're going to learn along the way. And for those of you who, for whatever reason, are not in position to invest and contribute at this moment in time, follow the journey at howtobuytheblock.com, howtobuytheblock.com. All
And
right.
even if you don't invest, I mean, I definitely would also push you guys to follow the Facebook group.
Yep.
It's going to be a wealth of knowledge shared there, you know, and it's one of the things that, hey, I might not be financially ready. I might not be comfortable. You know, I had a, you know, a call with a potential investor on a deal. I was helping her farm for herself, and I was, you know, literally just from a gut feeling, I was like, if your gut doesn't feel you should move forward with this lot to build this duplex, don't do it, because there, you know, there will be other deals, and you know, I might not be comfortable right now, but follow that Facebook group, and you know, whether it's with us or whether it's with yourself or your family, your friends, you know, however you decide to your investing journey, you know, we just want to be able to help spread that knowledge and help, you know, build this ecosystem where we're all on this journey together. So even if you don't invest, I definitely push you guys, you know, to follow, you know, the Facebook group, you know, continue building your knowledge, and any way, you know, we can add value to, you know, what any of you guys are doing, or help, you know, within your city or on your investment journey. You know, we're definitely there to help.
100%. Minimum on GameVest right now is 5,000. If you're investing less than 5,000, you should go through Buy the Block. The minimum on GameVest, even if we have a pre-existing relationship, is 5,000 right now. We only have about 40 slots left there. So minimum on GameVest is 5,000. If you're investing less than that and have a pre-existing relationship with us, use Buy the Block. Go to buybackablock.com. Buybackablock.com. All right, y'all. So you have my email address. Do not email Anthony. Email me. All right, you have my email address. Any questions, I'm here to answer them for the next 2 weeks. I want you to make an informed decision with any investment, including this one. Much love, y'all, and have a great evening. Talk to you soon. Peace.
Thank you all. Appreciate it.